Good morning, everybody. Welcome back to Morning Markets on Tuesday, the 14th of April. Markets have been closed for a few days, and there's a couple of things that I'd like to recap that's happened over that period. The first of which was an announcement from the Federal Reserve in the US on Thursday afternoon, which saw a further injection of liquidity into the market of $2.3 trillion, primarily to support three areas of the market. So loans to small and medium-sized enterprises, making it easier for US municipalities or cities to issue debt, and also finally support for the high yield bond market. And it's this latter point that I think is really interesting, and this extends the support that the Fed is offering to the bond market through from investment grade through to high yield. And high yield is where lower quality issuers typically raise debt. I think this is really important because this had been an area of stress. And by stress in the bond market is measured by spreads, and that's spread over treasuries. And the spread in the high yield market had moved out quite considerably through March to over 11%. That has now come back in quite materially. It had come back in over the course of the week, but also then much more so on the announcement from the Fed. And high yield spreads now are about 8.5%. So a significant movement in spreads as a result of the Fed program. And that's the first time I think I can ever remember that the Fed have intervened in the high yield market. Other things that I think are also important that we should touch on, we had an agreement from OPEC, which came out at the last hour on Sunday, talking through the production reduction that they were going to put through. It has kind of disappointed, I think, the market in that they're going to remove 10 million barrels per day from the production. If I think about where we are today in terms of demand is before coronavirus 100 million barrels per day. Thinking about the demand destruction we've seen, 20 to 30%. So putting the two together, a 10 million barrel reduction from production doesn't really help to balance the market. And we've kind of seen that in the reaction of crude, with prices not really moving much on the announcement. It is important, however, to keep in mind that prices did rally 40% from their lows that they hit earlier in March. Two other developments over the period as well to touch upon. One is in Europe, where the Eurozone finance ministers have agreed a Euro 500 billion package to support the Eurozone economy. And that's in a number of areas. The point there that I think is interesting that we should note is, however, that they failed to agree on a policy of debt mutualisation, i.e. issuing debt at the Eurozone level to support all member countries. That's still for discussion and remains quite a difficult topic for the Eurozone to work its way through. In the US also, we had unemployment data where we saw a further 6.6 million claimants. And that takes the total claimant count rising to sort of 17 million individuals over the course of the past 3 weeks in the US. So that gives you an indication of the employment loss that we've seen in that marketplace over the past couple of weeks. And finally, in the US, we also saw the Democratic nomination process coming to an end for the presidential candidate, with Bernie Sanders walking away from the process and actually endorsing his rival, Joe Biden. So that leaves Joe Biden to tackle Donald Trump in the presidential race. All else being equal, that should take place in November of this year. Turning to overnight markets, we had a weaker US performance yesterday. That didn't feed into Asia overnight, where we saw a stronger performance. A lot of that is due to much better than expected trade data from China, and that was both imports and exports that came in significantly better than consensus expectations, although I accept the economic expectations and forecasts at this point in time are very difficult, but both numbers better, suggesting that there was a stronger performance from China in March. Looking forward to the week ahead, we start to move into reporting season in earnest, with a number of US financial companies reporting over the course of this week, and also through Europe and the UK. Economic data-wise, we have some retail sales and industrial production numbers from the US in the middle of the week. And then at the end of the week, we've March GDP and retail sales data for China. Both sets of data will be very interesting for us to observe and see the impact of an economy that's in the midst of the COVID-19 issues at the minute in the US, and then contrasting that with China, which is trying to navigate its way out the other side. A lot to catch up on today, but hopefully you found that useful. Thank you. Bye.